Hey traders, Stephen Brooks here, and let's talk about what a bottom looks like, at least on an intraday basis. So overnight, once the futures opened 6 p.m. Eastern time yesterday, of course, the market sold off pretty hard. We had a little bit of a bounce at the 45.26 level at 4 a.m. And then, of course, once the market opened at 9:30, we did sell off another, let's say, 25 points. But what happened around the 10:30 time frame is very, very important. Remember, the pre-market low was, let's call it 45.26. Now, what will typically happen is if you are a bear, right, and we hit a low, and then we bounce from there, what you want to do is you want to be able to take the market back to that previous low because it is of your opinion that that is where all the longs stop losses are going to be. And if you are able to get below that level where you feel stop losses are, you will get that cascading effect to the downside, assuming that you are right, that the stop losses are there. Now, the other side of the equation is if the stop losses are not there and there is no follow through to the downside, that is typically a time where markets will rebound, at least on an intraday basis. So today, of course, between the 10 o'clock and 11 o'clock time, the bears did try to go ahead and rip it below that overnight low. When that does not happen, right? When people are watching the market and they think, oh man, we're going to get crushed from here and go lower, and it doesn't, that is a time where the market is likely to reverse and rip higher. So what did we see? We saw the market was not able to get below meaningfully that 45.26 level. They got below it by a couple of points because there was no follow through of any sort of speed and velocity, right? That means that not only are the bears not very strong intraday only, but that the stops that the bears assumed were there weren't. And if the stops aren't there, that means there's really nobody there to be able to take the other side of the trade, and the market goes higher until it finds other sellers. So again, great example here today. We had the overnight low. We retested the overnight low. That was the point that the whole world assumed we would just get crushed lower. We did not. There were no stop losses there, and we ripped higher about 50 S&P points for the rest of the day. So the next time this situation happens, again, think about it. Where would you put a stop if you were the buyer? Right? If we go back to that level and the market or the stock or whatever you're trading doesn't flush through, that is typically a situation where the bears were wrong. They don't really have that strong of a hand. Sellers are not willing to continue to sell at lower prices. Thus, what's going to happen, like it happens in every auction, is that prices will drift higher until sellers are found.